The following is an excerpt from an askSlim member video. Subscribe to our channel on YouTube and share it. We put tons of new videos out every week. Like this video, give it a thumbs up, and follow us on Twitter at askSlim. Email matt@askSlim.com and request a demo of our technical analysis services, trade planning tools, and amazing video workshops. Our services support all trading and investment styles. Please do enjoy this video. Here's that triangular shape going on, not much more time on the downside in here, and then likely to get some upside in here. What's going to cause that little rally? Well, I don't know, maybe the stock market starts to fail from this incredibly massive buying panic that we have right now in the market. So that's a look at the ZBs. And nothing to show you, nothing to tell. It's a dead market. They've absolutely killed it. And for somebody like me who has traded bonds, I traded in the ZB pit on the board of trade and the ZNs, ZN options, ZB options back in the 80s, and when it was an absolutely incredible pit in there. They used to say that if somebody could die of a heart attack in the bond pit, and he wouldn't hit the ground, you wouldn't even know it until the market closed. So that's what that market was like, and look how it has been destroyed now. It's just a sad thing when you look at that. So now we'll take a quick look at the stock market. The stock market is the SPX is where we're going to start there in stocks, and here is the patterns we're looking at. So the big pattern right in here, in here, coming across there, that is pushing down into this July period where we have thought there was going to be a correction. We still think that is the case. And again, here's that yellow oval signaling that that is the period of risk. I want you to note that this originally said May to July, but now because this cycle right in here bottomed early in such a strong configuration, that changes. We listen to what the market says, and it says we're getting through the 61.8% level. The target now, or the next resistance level, would be up here around the 78.6, which the NASDAQ easily has surpassed. That's at around 31.36 at that level right there. That is a strong possibility that the market can do that well, that we see that. That is not what our expectation was. We still are always going to follow what the market tells us. So a rally up here into June, and then sometime in June roll over with a lot of risk into the July-August period. We have upgraded that, as you can see, to no longer challenge these lows, because that is what the market's telling us right now. So right now the risk is not high for the stock market, and you can see that right in here as we had an early bottom in this pattern right here. The earlier the bottom in uptrends, the more anxious buyers are, and that gives you a strong message. This cycle shifted to a slightly smaller cycle rhythm that we have in there. I would not look for 16s. It's probably more like 18s, so we're probably going to get a rally up here. Again, there's that 78.6% around that 31.35 area right there. This is what we consider to be a very risky sell zone as it gets up into these levels, but still just 4 days into this rally. It's not likely it's going to peak. What's likely is that you get a little peak in here, it rolls over a little bit into this half cycle, and then moves up again, and probably tries to threaten up here in June near that 78.6%. This is a key level over here. Now remember, we had a key level over here at 27.27, right over here where it made that low. Now, because this cycle bullishly configured gives us a new level, 27.67 is now the key support level. Were it to come down and break that, it would then turn everything negative. In the meantime, it certainly doesn't look like a threat, because right now that is the market is 200 points above that level. So it looks like, not a chance it's going to give you any kind of a negative breakdown in there. And you can see the upward projection is based on the configurations and what the market tells us. The market tells us it's strong. Market tells us momentum is solid and moving up. The market tells us that each time the projection oscillator gets oversold, it gives you a warning that it is going to move up again, and each one of those was correct. You can see that over here where it got overbought in a negative momentum, it was a sell, and each one of those is correct. So we just take the sum of the evidence. We look at everything the market has to tell us. It doesn't matter if I think it's a bear market. I think it's a bear market, but it does not matter. All that matters is what the market tells us. And if you're trading in any other way other than being bull bear agnostic, your bias is going to get in the way, and it's going to hurt at some point. So just remember that. It's important to listen to what the market tells you, and don't be in the way of what the greatest upside or downside moves is likely to be when the market tells you that. This is a positive looking pattern that we see in here.